Hey everybody, welcome to the morning market briefing. It's New Year's Eve, Wednesday, December 31st, 2025. Hope you're doing well out there. If you are watching us on YouTube, make sure you're subscribed, all that good stuff. Make sure that you turn your alerts on. It's a good way to just know that the boys are in the saddle. We've done some work on the set in the last 24 hours. We've got John Cena just kind of stalking Ben from behind. We have a random piece of globe artwork that was in this office when we bought it. All kinds of good stuff. Tom, I think we're going to get some light up signs, all that good stuff. But the big news is Tom back in the saddle. He's alive.
It's good to be back. Been down bad with the flu. Word on the street is that it's going around pretty hard right now, to the tune of HCA reporting that hospitals are nice and full. So a lot of people are saying it's worse than COVID. Another winter of destruction and death. Both my kids have fevers at the moment, but they seem to be handling it much better than I did. I got absolutely wiped out by it. So strong finish to the year. So looking for 26 to get started pretty soon here.
Yeah, we're almost there. Ben, how we doing?
I'm doing well. So far so good. I will try to keep my distance today.
Good luck.
I think I'd be unpopular if I brought home something. But so far I haven't. And I think you guys are probably out of the contagion period, so I think I escaped.
I've been on antibiotics for 4 days now, so we should be okay.
Yeah, he's all good. All good. We did get Fed minutes. We're going to do a fun show today. We're going to talk Fed minutes. We're going to talk things that people were looking to see happen in 2025 and how those played out. We're going to talk a little bit about 2026 and some themes that I would argue some people are just kind of taking for granted right now. And then college football at the end. But Fed minutes, let's jump in there.
Yeah, I'll toss it over to Tom if there's anything he wants to add. But basically the minute said there's a pretty high bar to any rate cut in January, but there probably will be some rate cuts next year. Obviously, we do think that there are going to be rate cuts next year, especially with a new chairman of the Fed. But in January, I think that they're being a little bit obstinate. When you look at the data, again, we've talked about this before, and I wrote about this in the market memo. But you've got this issue with higher unemployment and inflation coming down. But in both cases, unemployment's up from a low level and inflation's down from a higher level. And so you could argue that you kind of want to stay restrictive to bring inflation down just a little bit more. But then you've got this number that we had with the GDP growth in Q3, which is way too backward looking. But regardless, the economy itself is doing quite well. And I think all of this can be explained by improved productivity. When you have higher productivity, you have lower inflation, you have more efficiency, you have higher unemployment, and you have higher economic growth. But the Fed's not really thinking in those terms. And so they're being a little bit more resistant to cut rates. And they're basically saying, if inflation's coming down and employment's going up, but the economy's still strong, it probably means the data's wrong. And I would say I actually think the data is probably as good as it has been, which doesn't mean it's great, but it's as good as it has been. And I think that they, just because the data isn't convenient or fitting their narrative, I don't think that means they shouldn't trust it.
Yeah, I think that if you look at it now, their estimate is that the first cut will be in June, second one will be in September, and that's probably it for the year. I haven't really done a lot of, setting up what I think my expectation is for next year, but I would say 2, probably 3 is where I would sort of land. I've been thinking a lot about the employment situation, and I think we may, in a similar way with the Zestimate bubble, we've talked about how the housing market has slowed and that a lot of these paper gains that people thought they had were maybe not real. I think we're probably there with the employment picture as well. I think that you look back during COVID and there was just this insane scramble to hire people, and the people were taking 20, 30% increases in pay just to shift to a similar job at a similar place, and there were so many, hot TikToks and stuff about, follow my day at Google, where somebody comes in, has a smoothie, farts around for 20 minutes, hits the sauna, farts around for another 20 minutes, has another smoothie, goes to the hot bar and gets some sort of latte, and then, they go to Peloton.
A nap pod.
Yeah, nap pod. I think there was a lot of that, a lot of excess, and I think that, along the theme we've been talking about with the deficit spending, I think there were a lot of companies that were able to almost deficit spend at the corporate level too at those times, where they could just spend money to spend money because it didn't matter. But now that rates are higher and probably going to be pretty sticky here, that you can't really do that anymore. You can't just spend money for the sake of spending money to make it look like your company's doing something. And I think that might actually lead us to a place where natural unemployment might really be closer to 5%. I think we've been unnaturally low for a long time. I think we've been deficit spending at the government level, which has employed a lot of people who aren't doing anything and aren't adding any value. And I think that might be the result here. I think that the three-legged stool, which, Scott Besson's been talking about for a long time, I think what it leads to is higher growth, lower inflation, and higher natural unemployment, which may not necessarily be a bad thing. I think that
it's what's historically been the case.
Yeah, I mean, you think back to high school economics, the natural rate of unemployment was roughly 5%. I mean, 97% of people arguably are not worthy of being employed. I mean, no offense, but
there's some real duds out there.
All men may be created equal, but all work ethics are not created equal. And I think that there's some thought to be had there. I think there are a lot of people who are employed who don't do anything, or at least don't optimize the company they're working for. And so I've been thinking a little bit about that. I think there's going to be a lot of panic from, if I had to guess, Elizabeth Warren about the unemployment rate. But, I think that if we start to rise there, I don't think I'm nearly as worried about it as I would have been, 5 years ago. I think that I think the state of play has changed quite a bit over the last, call it 11 months and 10 days, how many, 11 days. And so I think that we need to be cognizant of that and how that looks economically. But, think of headlines that came out in April about how bad things are going to be. The shelves are going to be empty. We posted a 4 handle on GDP in Q4, and we posted a sub 3 handle on inflation. And we're all still here. Are things expensive? Yes, they've gotten a lot more expensive over the last 5 years, but not a lot of that was added in the last 11 months.
Yeah, and that's what I think there's still this disconnect, and I think we'll see this come into play in the political discussion as we talk 2026. But there is a disconnect where I think there's still people clamoring for things to just be cheaper, but that's just not going to happen.
And be careful what you wish for.
Yes.
Because
when prices get actually cut, not that the price is not rising as quickly, but actually cut, it's usually not a good thing.
If your home is down 10% below what you paid for it, that's not good.
But I'm
not saying it is, but I'm saying if that's what people want,
right,
be careful.
The efficiency factor is actually what might bring prices into a real obtainable level. So theoretically, Colgate Palmolive, they hired a bunch of people. Many of these people aren't doing anything. You've got financial analysts 4 and 3 and 2 and 1, and they're all working on the same projects. You cut half that head count, they can now bring down the prices of their things because their overhead is lower. Their fixed costs go down because they're employing people who aren't adding value to the company. That's a good thing from an inflation standpoint because they're becoming more efficient. Companies are becoming more efficient. They're making more money, which is good for the stock market, good for shareholders, good for prices coming down, good for the retailers, as opposed to we're going to put some sort of price fix in, or we're going to attack the evil Kroger conglomerate that makes 2% margins. That's how things get better. It's not we're just going to print money and send it in mailboxes and hope that you can buy more toothpaste.
Necessity is the mother of invention, and tariffs brought that necessity to businesses that have become bloated and fat. And what have they done in the last 6 months? They've improved margins with tariffs, and people's minds are blown. But this is necessity's mother invention. This is innovation. This is the American capitalist model of figure out how to do things and figure out a way to increase profitability in spite of these headwinds. And many successful companies have been able to do that over the last 6 months.
Yep. Let's talk a little bit about 2025, the year that has passed, specifically with the new president coming in for a second term. When Trump came back, people were expecting some pro-business policies, and I think some people were caught quite flat-footed by the combination of Doge and tariffs.
Yeah, I think everyone remembers those pictures of Elon dancing at the Trump inauguration and Trump at the opening bell of the New York Stock Exchange and saying how incredible things were going to be. And I mean, I think Republicans and Democrats alike were in agreement that this thing was absolutely going to rip. And we were a little bit more circumspect about that because we said, hey, wait till we get to the sausage making process because it's not going to be pretty. And Doge certainly was the first one that wasn't so pretty for people. And then the tariffs and Liberation Day on April 4th April 2nd really bit. And I think that was a surprise and created a lot more uncertainty and concern about the economy than a lot of businesses felt coming into the year.
I mean, Ben and I talked about this briefly yesterday in the chat, but if anything that was wild and maybe a bad omen or some sort of omen was 8 a.m. January 1st, 2025, the first major headline of the year was that some guy blew himself up in a Cybertruck in Vegas. Yep. And was it a terrorist attack? Was it a political statement? And it was not the first Cybertruck to be lit on fire that year. But there are a number of things that people just don't talk about that happened in the last year. It was a crazy year, but it started off with a bang, obviously with a Cybertruck. And that probably set the tone for the rest of the year in terms of what really drove the markets.
And it's interesting. I think people were surprised by the impact or the tariff discussion. I was going back through notes earlier this morning after Ben sent out the agenda. When did we do our market symposium? Maybe early February of last year?
Yeah, early February. February 6th.
Point number one of how because I kind of gave the presentation on the political environment. Point number one on Trump is that Trump is, above all else, concerned with doing what he says he's going to do. I think anybody that was really surprised that Doge got in there and started doing things, anybody that was really surprised that tariffs were top of mind, they weren't listening to Trump. But we also saw their interpretation of what these things were going to be quite off, specifically with the expectation that tariffs would cause 6% inflation.
Yeah, this was someone I hosted a panel downtown with people who actually flew in. They were CIOs of some of the biggest fund managers out there. And one of them said that inflation is going to be 6% because of the tariffs. And like very confidently said, look, I mean, where are we right now? We're at 3.5 and you're going to add 3% from the tariffs. So you're at 6.5% inflation. And I mean, she top ticked it.
Yep. I mean, we went to the Fixed Income Leaders Summit in Washington, D.C. to see all of the top, Vanguard, T. Rowe Price, Fidelity, all of the biggest fixed income managers in the world, managing trillions of dollars. And the theme was, we're going to end the year with the 30-year somewhere between a 5.25% and 5.5%, and that, tariff inflation is the most dangerous thing. You should stay away from the long bond as much as possible. That turned out to be an incredibly bad trade. And we did the opposite of that. I mean, you can look around many accounts and you can see treasuries that mature in 2045, 2052 that were bought, back in May and June when rates were really sold off. And those things are up double digits. And you can't touch those yields now. And you might in the future, but it takes 5 years. You already have made all the coupon and you've eroded the duration and you would have been in a real
You'll be up 25%
position
in 5 years.
Yeah. So there's a number of things I think there was a lot of certainty among professional people in here that was all generated by groupthink. And you got to be really careful in times like Liberation Day, where everybody's moving the same direction, to really look and say, hey, is everyone wrong here? Or is everybody just going off the same narrative that's based on someone came up with the narrative and everyone ran with it? I can tell you that my central thesis from the symposium last year was that the 10-year was going to run the show. That the 10-year was going to fall throughout the year, and then when it did, we were going to see the markets do really well. And my assumption was that we were going to see the housing market pick up. It turns out there are a lot more structural issues in the housing market that, even I didn't see. Now, did the 10-year fall, and when it got to its lowest point, did the market also reach its highest point? I mean, that also happened, yeah.
The 10-year just didn't fall it didn't fall as much as I was thinking it would fall.
I mean, I think we were probably I thought maybe we'd land about a 4, and for moments we were sub 4 this year, but I mean, I thought that we would see much more enthusiasm around mortgages, but we've continued to see, real wideness there in the spreads between, where the 10-year is, where you can actually buy a 30-year mortgage. And so I think that's going to be a real sticking point. But, I mean, things have improved quite a bit since then. Bonds have done very well this year. And, I mean, for the last 2 years, we've been saying we got to buy mortgages, we got to buy mortgages, we got to buy mortgages. And at first it didn't look like anything, but, they outperformed almost everything in fixed income again this year. And those are on the books for a long time because, I don't know about you guys, but it takes a long time to pay off a mortgage. So
It does. It takes a while. People thought AI spending might roll over. It just ramped up. Simultaneously, staying kind of in the tech space, Tesla, now the 4th biggest company in the U.S., famously, Tim Walz, former vice presidential candidate, really did a victory lap on Tesla stock going down in March of this year. It's up 106% since then.
What's crazy, and this is just kind of where we have to be really careful on passive investing, is the rise of passive investing and the eagerness to not miss out from a lot of these funds. S&P 500 Value Index has really been hemorrhaging assets, and because it's been underperforming because growth has been outperforming value. So what they did is they added Tesla into the value index. And this is a shocking development, and I saw this and I had to triple check the holdings. It's now the 4th largest holding in the S&P 500 Value Index in the U.S.
How about this? Speaking of making bad decisions, remember the entire first 3 months of this year was the rest of the world is no longer going to invest in the U.S. because it's a bad trade and there's no value there. Remember that? When it was the Netherlands were like,
yeah,
we're
out.
We're so high and mighty that now that Trump's the president, that we're going to divest entirely of U.S. assets.
I mean, I remember us at one point talking specifically about somebody, it might have been the Netherlands, pulling like a $1.5 billion allocation to U.S. large cap stocks and just laughing like that mattered. But it was a headline.
Yeah. The irony is that the Netherlands is a swamp. Good luck out there, guys.
Let's talk 2026 a little bit. We will have elections coming up, midterms coming. Seems to be just kind of taken at face value that Democrats are going to get the House back.
Yeah, I first of all, I don't know if that should be taken at face value. But secondly, I think no one's really talking about the implications of what that means. I think ahead of it, what it means is there's going to be some really subtle, significant, in my opinion, fiscal stimulus. And I think that's going to be different than what it looked like under the Biden administration. I think this is going to look like investments in the U.S. companies. I think it's going to look like big spending for America's 250th birthday, the FIFA World Cup, all of those things. I think that's going to happen. And then I think you're going to have big time monetary stimulus. Tom talked about a base case of 3 rate cuts next year. I don't think that that's wrong as a base case, but I think it's not unreasonable at all to think that they could do 6 to 8 rate cuts and take rates down to 2 flat or even below. Because if inflation does start to come down, you lap the effect of tariffs, you start to have this shelter inflation catch up to where it just happens on a 6-month lag. Then all of a sudden you're going to have that downward trend at 2%. And, I mean, you bet your bottom dollar that Donald Trump's going to be pushing Kevin Hassett to cut in a big way.
Yeah. I mean, I definitely think that's call it a 20% outcome. I worry about them getting too caught up on the unemployment rate.
Yep.
I mean, that's kind of the counterpoint to I think it should be higher and probably natural. does everyone else think that? Do the optics of that? I don't know. I'm curious to see how it plays out. But for right now, I'd say 3 is probably the most likely outcome in my mind. But I am absolutely subject to being wrong. So.
I mean, Q3 is going to be by far the most interesting. I know the elections happen in Q4, but Q3 is going to be by far, from the economic standpoint. It's usually the dog days of summer, July through September, people aren't in the office. I think this one is going to be the most fascinating Q3, I guess, since 2024. But no, it's
big statement.
We're going to have massive fiscal. We're going to have massive monetary. We're going to have the kind of final normalization, because Q1 and Q2 are going to have super easy comps. We're going to have comps over that. It's going to be a fascinating period, I think.
I think people will continue to keep an eye on New York City, specifically with Mayor Mamdani. There's going to be overreaction one way or the other. If his ideas and policies are viewed in the short term as successful, I think that will have a major impact on the midterms and the type of candidates that have success, and perhaps further rise of more socialism-aligned candidates. If it's a failure, we may get some chaos there. I think we'll continue to see deportations at the top of the headlines.
I mean, I chatted a little bit with Ben yesterday. I was working from the house, so it was only over Teams, but I just asked Grok because I was curious, and I was thinking about big stealing of money scandals. And so I was like, what was the total net loss, Mr. Grok, from Bernie Madoff? Because, Bernie Madoff, famously, everyone talks about, a $65 billion fund, but those are all pretend numbers that he inflated. What was the real damage? And after the government came in and they clawed back a lot of the money, and they basically took all the assets from Bernie Madoff himself, the total net loss for Bernie Madoff was about $2.5 billion. And I think everyone agrees that was a horrible thing to do. He basically bankrupted a number of Jewish universities. I know that because the bonds got crushed. He forced the sale of the Dodgers, I believe, because they were heavily invested with Bernie Madoff. Just crushed a number of people. And that was $2.5 billion. Right now, the amount of money that seems to have been pilfered in the state of Minnesota at $9 billion is 3 times that. And people are actively defending it like this is somehow totally above board and something that shouldn't be looked at. And if you think of Minnesota as being just a midline state, say Minnesota is a middle-of-the-pack state in terms of population, demographics, money they get from the U.S. government, I think it's entirely possible that we could have over $1 trillion of money that actively gets wasted on programs like this, where money's just paid out to public institutions, learning centers, and that's not going anywhere. And I think that if we could get a handle on that, like say you go into California and New York, and I mean, I'm sure there's cases of this in Georgia. Think about how efficient this country could be if we weren't spending that much money on just abject fraud. Like if you can just send somebody in with a camera and be like, is anything going on at this business that's getting $1 million handout from the government today? And if the answer is no, then they get shut off. I think it would be insane. I mean, think about the deficit. If we're at $1.5 trillion for the year, if you could cut that in half just by a function of having some YouTuber ding dong walk around and ask people what they're doing at these businesses, could save you $1 billion a day for the next year. I mean, that's the equivalent of all the tariffs that we got this year. And suddenly your free cash flow goes up so much and your deficit goes down. And the amount of taxes that need to be, taken in your paycheck, I'll call it taken, would have to go down because there wouldn't be that much government spending. And so it makes me wonder, we talked a lot about the healthcare spending is growing at 8% a year in this country. Well, they're saying that the healthcare Medicaid spending in Minnesota has gone up 800% in the last 5 years. Well, if that was all fake news, people were just stealing from the government, and you take that down to zero, and you do that in every state, I bet we could get the deficit under control very quickly, and there'd be a lot of sad people who were taking advantage. And frankly, I don't care.
Yeah, I'm for that.
But it's an interesting thing. I mean, it's like if that's just Minnesota, a state that, no offense, no one ever thinks about, certainly not before the 2024 election. I mean, just think about all the different states that probably has at least some piece going on. If $9 billion is the average, and there's some states that are 50 times larger in terms of population than Minnesota, then we need to really think about that. End of rant.
Do we think we'll get Russia and Ukraine resolved in 2026? It seems like we might.
I think so. I think there'll be some resolution. It may be a détente. But I think the implication of that means, okay, so what if there is resolution in Ukraine and Russia? Well, I think that increases the supply of fertilizer. It increases the supply of grain. It increases the supply. I guarantee you immediately the Europeans turn on the natural gas pipes because they need the energy. And no one really wants. I mean, these guys were shutting down nuclear facilities a couple of years ago. They don't really want to build nuclear facilities, but they have the political pressure to do so. But as soon as they can import Russian natural gas again, I am very confident that they're going to turn on those taps. No one's talking about that, but that lowers the energy prices for Europe and by extension the United States as well, because we'll be exporting less LNG. And we'll have less loss that way. So I think that energy theme for next year, and beyond oil, but more kind of the utility grade power generation, will probably be less severe than a lot of people think. I think a lot of people are very petrified about what their utility bills are going to do next year with all this data center demand. But I think that, I mean, and Russia's just one example, but I think you have a lot of other examples with, including the deregulation of oil and gas drilling here in the United States, that will help with the supply side.
AI continuing to accelerate. We alluded to the implication there with unemployment earlier, but I think that's going to be a reality.
I mean, if you think where AI is today and where AI was a year ago, and then you say, okay, we're not going to progress that fast next year. We're going to progress 2.5 times as fast, at least 2.5 times as fast. Then think about where we'll be at the end of next year in terms of AI. And then all of a sudden you start thinking through those lens of the sci-fi, like these robots and autonomous driving. And when you think about the progress that we've made in the last year and then accelerating that to another, basically 4 more years of progress, 3 more years of progress in a single year, all of a sudden you're like, man, we actually could get there by the end of next year. And I think that means that's going to change how people work. It's going to change how people need to work. And I think that it's going to require a lot of adaptation from people. And I think it's going to create some sort of, it can create some consternation. And so I think that's going to be, I mean, Google wants to double compute power every 6 months. So that means increasing by 4x in the space of a year. And I think that this is going to be a theme that we just continue to see. And I know that everyone kind of understands that from an intellectual level, but I mean, just think about what that means and what that would feel like if we did accelerate that fast, and what ChatGPT would be doing this time next year, and Grok and all these things.
Chat GDP, they say.
Man, love that. Tom, bonds going to outperform stocks next year?
I don't think it's impossible. Man, I mean, if Operation clean up this Somali learning centers thing goes on across the entire United States, and we drop $1 trillion in fraud off of the deficit, I mean, yields could go to 2%. I mean, we wouldn't have to issue any more debt. I mean, think about what really drives availability of bonds, supply and demand. If the supply goes down because we're not spending so much money and just handing it out to people who are putting it in envelopes and sending it back to Somalia, then suddenly we don't need to issue so many bonds, and that definitely erodes supply pretty quickly. I think so. If the housing market doesn't pick up, I think we're going to see yields come down, and I think there's a lot of reason to be in the longer areas of duration for the first time in a while. I think there's, for the first time, you're looking to fix your duration longer, fix your coupons higher. And, for a long time, we were in a lot of floating rate stuff because rates are going up. Every time they raised rates, we saw the income increase, and that offset a lot of the downside of the bonds. I think we're in the opposite now. We need to fix our float, I think, is the theme of 2026. We need to make sure we're locked in higher for longer, even if rates aren't higher for longer.
All right, college football playoff. Tonight, 7:30 p.m., the 10-seeded Miami Hurricanes playing number 2 Ohio State. This is the Goodyear Cotton Bowl Classic. We're going to learn a lot about the Big Ten, I think, in this game. And it's interesting to me that the spread seems pretty big to me. I don't know if you would agree with that, guys, but I'm seeing it right now as the over-unders at 40.5. Ohio State favored by 9.5, so something like a 25-15 type ball game. I don't have a whole lot of confidence in this Ohio State team. I think it's noteworthy that they've played 2 ranked teams, currently ranked teams. They won one of those games 14-7. They lost another one 13-10. Miami, good offensive line, good defensive line. There's obviously always the chance that Carson Beck just puts the ball on the ground. We've been talking about that on this call for years. Tom has astutely observed that once a game he just drops the ball. And if he doesn't just drop the ball, he'll throw it to the opposing team often. Prediction. How we feeling?
I think Ohio State wins, but Miami covers.
It's going to come down to Carson Beck. I think it's a possibility that it's either going to be Miami loses by less than a touchdown or they lose by 3 or more touchdowns. Carson Beck could go out there and throw 5 interceptions and have 3 fumbles.
Yep.
Or he could play the game of his life, which he kind of either does one or the other. That's just sort of his MO. So, or it could break his forearm against the helmet, and whoever the backup can come in and get knocked out, but show a valiant effort.
Yeah. Miami does have one thing that Ohio State does not have, and that is a win over a college football playoff team this year. So, got that going for them. I would love to see Miami upset Ohio State. I think it would be a real indictment of the Big Ten. I think it would reframe how we're thinking about the other 3 Big Ten teams that are still in it, one of which will play tomorrow at noon against Texas Tech. Oregon, number 5 seed, Texas Tech, the 4 seed, playing in the Capital One Orange Bowl. Oregon, surprisingly to me, only favored by 2.5. This is probably, I would argue, potentially the biggest mismatch of all quarterfinals.
I think Oregon's getting a lot of heat for that last half that they played against. Was it James Madison?
Yeah.
And I mean, they were already on to the next game.
I think it was a perfect scenario for Oregon where you're up 34-6, but then you get sloppy enough that you can keep Dan Lanning and the coaching staff angry at you.
I mean, I don't even think I don't think Texas Tech is ready for this. I think they're out of there. I know they're the 4 seed, but I don't think they have it. Oregon, unfortunately, Oregon will cover the 2.5.
I do like looking at the tickets on these. You can get tickets backing up for the Cotton Bowl for as cheap as $35 right now, which seems
that's crazy, man.
Pretty insane. You can get tickets for this one for $37. At 4 o'clock tomorrow, number 9 Alabama versus number 1 Indiana in the Rose Bowl. Tickets a steep $70. Still seems like a pretty good deal. I think there's supposed to be really bad weather out there, actually, for this game. My general view is I think Alabama's getting a little bit too much credit for that comeback against Oklahoma, a team that was really identified all season long as a team that did not have a consistent offense. And it was pretty inconsistent in that contest. So Bama getting the benefit of the doubt there. I don't know. I think people are tending to think that Bama really turned the page and they're not who they were against Georgia. I don't think they ever necessarily were that. That was obviously a horrible outcome for them. but I don't know that they're much better than what we saw against Oklahoma. And Oklahoma is a much more flawed team than Indiana. Right now, Indiana favored by 7, which seems a little bit big, but I think Indiana gets the win.
I think, for me, I think this is the game of the week. And I think that Alabama is definitely – I feel very strongly that Alabama will cover and not lose by more than 7. And gun to my head, I think Alabama wins. But I think it's going to be a very exciting game, full of great plays, really bad mistakes from Alabama, and I think Indiana will just kind of be there. I honestly haven't seen much of Indiana. I give them a little bit of credit for the Ohio State win, and they went into Autzen and beat Oregon. But I think Oregon's also a flawed team, so this will be a good test for Indiana. And to your point, Andrew, I think it really will pit the best of the winner of the Big Ten regular season against the winner of the SEC regular season.
Man, I was just looking. I'm trying to formulate my thoughts based on looking at the props on these games. So for Alabama, Jam Miller's over-under on rushing yards, 31.5. Fernando Mendoza's over-under on rushing yards, 21.5.
Wow.
Which is pretty wild. I don't know. I think it's going to come down to Ty Simpson and how he plays.
I saw something that he's really been big into Legos. Like he built this massive Lego set in 3 days or something.
Yeah. Legos seem to be very hot in the streets these days. Maybe I missed something.
Yeah, I saw that clip too. He was like, "Oh, I did that." Like he talked about it as one of his crowning achievements of the past year.
I actually texted that to junior and fast rising fixed income analyst Ryan last night.
Big Lego guy.
Notable Alabama fan, Ryan Miller. Georgia plays Ole Miss tomorrow night at 8 p.m. in the Sugar Bowl. Tickets $162. Georgia favored by 6.5. Ben and I talked a little bit. I don't think it's a positive for Georgia that Lane Kiffin's not there. I think there's a little bit more unknown and variability with Golding at the helm for Ole Miss. I feel pretty good about this contest. I think Georgia's defense has improved significantly. You never feel great having to play a good team twice. It's always a little bit difficult, but I think the Dogs will get it done. They've got to get revenge for the terrorist attack last year that really derailed the season. So
also on January 1st.
Yep.
Big day last year.
It was a big day
for chaos.
Yeah. I mean, that seems like a million years ago, but Georgia didn't even get to play their game the day they were supposed to play it last year. So sad times. But yeah, I'm taking the Dogs. All right.
Yeah, I will too.
Man, what do you think about
I think they go on to win it all.
Lawson Lucky anytime touchdown plus 300?
I love that. I think he had 3 against Ole Miss in their first game.
Yeah, I like that one. Also, Oscar Delt plus 440. I feel like that's going to be a sneaky way to make some money on that game. I mean, obviously Nate Frazier, Gunnar Stockton, all negative. So I want plus money. Also, if you want to really stake your claim on Carson Beck, no touchdowns anytime in the Miami game plus 700.
What's no interceptions?
Oh, sorry, that's what I said. No interceptions.
No.
Sorry, I meant no interceptions anytime. No touchdowns would be crazy.
Yeah,
but
I kind of like that bet too.
Yeah, no touchdowns seems more likely than no interceptions.
Yeah, sorry, no interceptions at all in that game plus 700, which would be, I think it would be a miracle.
I think you're right. All right, we'll wrap it up there. Talk to you guys. I guess you guys here Friday?
No. I might come in a little bit.
No call Friday. We'll be back Monday. Ready to rock. Talk to you soon.